Hello traders, Gary Wagner here. Just about 12 noon in Honolulu, 5 o'clock in New York. It is Friday, December the 6th, 2019, and this is the Daily Report for Gold and Silver, our weekend review, and what a way to end the week. A tremendous swing to the downside in both gold and silver following the release of today's U.S. Labor Department's jobs report, which came in well above expectation. Now, ADP came out just earlier this week, and they missed their expectations completely the other way. About 86,000 jobs to the downside. There were only 66,000 jobs added, and they anticipated 150. Today's estimates came in at about 185, but the actual number was 266. So many analysts, including myself, were really looking for them to miss the other way. That didn't happen, and I was wrong in this case. Let's take a look at current pricing as well as our technical studies. As we talked about in our opening letter as well as our opening statement, both the ADP report estimates as well as the Labor Department's estimates missed big, but they were the opposites. One came in well under expectation, one came in well over expectation. And because the ADP numbers came in well under expectations, many, including myself, believed that we would see the same thing with today's report. Nothing could be further from the truth. As a result, we see gold sold off, currently trading down $18.60 at $1464.50. The low, which is important to us, is $1463.30. That is above our current stop on our current trade, but nonetheless, we have this trade moving against us. We'll talk about that, of course, as we pull up our technical studies. Silver, though, had the greatest drawdown today, losing 43 cents, a total of 2.54%, back under 17 at 1662.5 cents. The lone wolf was palladium here, 1851, up 5.30 on the day, and platinum traded down nominally, off by $2.70 at $897.90. That all in light of a stronger U.S. dollar, providing some pretty strong headwinds for the precious metals. Let's take a look at our current studies. Traders, we are looking at a daily candlestick chart of February gold. No doubt when we look at today's activity, we did see the market take a big hit, and that does affect our current trade. We'll talk about that in a second. The one thing that we have to acknowledge is the fact that on Wednesday, we had a crossing between the 50 and 100-day moving averages, and that cross due to today's action continues to widen. We are long, but we have our stop at 59.13, and if we look at this particular area right here, which is 1460, and that's how we based our stop, we put that stop below the candle that came in on Monday, as well as the low of the candle that came in on Friday, and I believe that that still has a decent opportunity of holding, although we have major support coming in at 53, which is the 38% retracement level. Nonetheless, we do have the market under pressure, and we have resistance, of course, at these two price points, which are 1485 and 1491, the 50-day and 100-day moving averages. We have resistance then again at about 1500, which is the 23% retracement level. That's the levels we're going to have to see taken out next week or even on Sunday if these particular prices here hold and we get a little pushback to the upside at the beginning of the week. Because December 15th is the most important day, I believe, this month, besides the jobs report, in that we will know whether or not President Trump actually initiates this next set of tariffs. That would be extremely bullish for gold and extremely bearish for the U.S. equities markets, just as today's jobs report was extremely bearish for gold and silver and extremely bullish for the equities markets. Maintain your long position, maintain your current stop. I do want to take a look at silver. One thing we have been looking at throughout the week in silver is current levels of support and resistance. Whereas gold did not break through major support, the same cannot be said for silver. We talked about this the other day with major support at approximately $16.82, and that is the 61% retracement level, and that comes in right in here. We can see that these lows did match lows that came in a couple of weeks ago, and that puts the next level right at around $16 even, and that's based upon these lows here. The other thing that we do want to note is when we draw a line across the former tops, and I'm going to try and put it as straight as possible, we can see that we did close just slightly below it, but right within that price area. Resistance still remains fixed on the 50 and 100-day moving average, and whereas we saw gold's moving averages cross much earlier in the week, we did get a cross that really occurred today in silver between the 100 and 50-day moving averages. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.